Gold hits $4,000 an ounce for the first time in history. But this isn't just a story about record prices, it's about China's deliberate multi-year strategy to build a financial system that could one day challenge the dominance of the United States dollar. Today, we explain how these two stories connect. This year's stunning 50% surge in gold prices is fueled by what analysts call the debasement trade. Investors fleeing government debt concerns, a weakening dollar, and fears that the artificial intelligence stock boom may collapse. But one player has been buying relentlessly through this entire rally: China. The People's Bank of China has added to its bullion reserves for 10 consecutive months, with just one recent purchase worth $253 billion. This isn't random accumulation, it's a calculated strategy unfolding on multiple fronts. First, direct accumulation. China has built the world's sixth largest official gold stockpile at approximately 2,264 tons, though analysts speculate the true figure could be much higher when including undisclosed holdings. Second, China has built massive domestic financial infrastructure to support this strategy. The Shanghai Gold Exchange has become the world's largest physical gold exchange, handling over 54,000 tons in 2023, about 3/4 of global volume. Unlike Western exchanges that primarily trade paper contracts, the Shanghai Gold Exchange emphasizes physical delivery. Third, and most strategically, China is now courting other nations to buy and store their gold reserves within China's borders. This move directly challenges traditional gold hubs, like London and New York. So how exactly does gold help China challenge the dollar? Through three key mechanisms. 1. Protection from sanctions. The freezing of $300 billion of Russian reserves in 2022 was a wake-up call. Unlike digital dollar reserves, physical gold stored domestically cannot be frozen by foreign governments. 2. Yuan internationalization. China promotes yuan-denominated gold trading through the Shanghai Gold Exchange. This encourages trading partners to settle transactions in yuan rather than dollars, boosting the currency's credibility. 3. Building alternative systems. Gold provides a neutral settlement mechanism for trade with BRICS nations and other partners. Combined with China's cross-border interbank payment system, an alternative to SWIFT, this creates parallel financial networks outside dollar-based systems. The implications are global. Central banks worldwide purchased 1,037 tons of gold in 2023, the second highest year on record. Even European central banks have reversed decades of selling, maintaining stable gold reserves since 2020. Major investment banks are now forecasting even higher prices, with some, like Goldman Sachs, suggesting gold could reach $5,000 an ounce if central banks shift even 1% of treasury holdings into gold. So while individual investors watch gold's price movements, China is playing a much longer game. The question isn't just where gold prices are headed next week, but whether this strategy will ultimately reshape the global financial landscape for decades to come. For financial news you can use, I'm Name. Goodbye.